Despite the weak ADP jobs report, the S&P 500 and the Nasdaq did hit all-time highs today as investors focused on progress on the trade front, with the president announcing a trade framework with Vietnam. So let's bring in Scott Wren of Wells Fargo Investment Institute and Adam Crisafulli of Vital Knowledge. Great to have you both here. And Adam, I'm going to kick this conversation off with you because we're 2 days into the new quarter and we're 2 days into the unwind of the momentum trade that helped power the second quarter. Does that continue?
I mean, so far it looks like it was confined mostly to yesterday. You saw a decent rebound in tech today, so we'll have to see if it continues. I think people are watching very closely some of the big macro themes, like you just mentioned with trade. We got one deal today, the details of which I think, if they show up in a lot of the other agreements, won't be received all that well by investors. A 20% tariff is a lot higher than the 10% baseline. And then we have on the other end kind of the outlook with monetary policy and yields. You had yields rise today despite a very weak jobs report, which is somewhat non-intuitive. But I think investors will be watching the details tomorrow very closely ahead of the July meeting with the Fed in several weeks.
So we are in the second half of the year, Scott. I'm looking at your notes here. Top 5 portfolio ideas for the balance of 2025. What are they?
Well, Morgan, what we're trying to do is, for one thing, we're trying to stick with some quality here, and we think the market's come, it's come a long way. Stocks are rich right now. We're trying to trim back. If you look at consumer discretionary sector, industrial sectors, those have done pretty well lately. We're taking money out of there. And to be honest with you, clients are either holding some cash because we think there's going to be a pullback here, or maybe they're circulating it into some other sectors that we do like technology. And you talked about the momentum trade. And I think what we're trying to do is the momentum trades carried the market. The breadth here the last few months hasn't been very good. That usually means that we're going to have a pullback, relatively soon. So we're not jumping in here. We're trying to be patient. But right now, one of our main portfolio goals is that we're going to see some downside volatility. We want to stick with quality bonds, 3 to 7 year intermediate part of the curve. We want to stick with large cap U.S. stocks, S&P 500. We also like U.S. mid caps. We don't want to be overexposed to the emerging markets or really developed international either. So quality, if you want to sum up what we're trying to do right now portfolio wise, it's quality. You want to be patient. We think there's going to be a pullback, and you need to be ready to step in if a pullback should occur.
Okay, Adam, we've got an S&P 500 at all-time highs, tariff deals that simply aren't happening largely within this 90-day negotiation window. So should investors be excited that the huge kind of market tanking tariffs don't seem to be happening despite what the Trump administration had threatened back in early April, or worried that the deals aren't happening?
Well, I think absolutely the consensus view is very much the latter. There's a lot of optimism that either the July 8th deadline is going to get pushed out for several more months, and or that you're going to see a series of kind of benign deals. So like the UK framework had been the template that a lot of people were hoping would show up in a lot of the other major trading partners, which is why Vietnam today, is somewhat concerning given that you have a 20% tariff. That's obviously double the 10% baseline. This is much better than that April 2nd chart in the Rose Garden. But still, there is a lot to come on the tariff front. And the next few days, the next week, is going to be filled with a lot of news. So, and I think if the other deals are more in line with Vietnam instead of the UK, I think that's definitely going to be a little underwhelming to the market.
Okay. Similarly, Scott, this is an odd week with a shortened trading day tomorrow combined with that labor data and then the long weekend. So how should investors be prepared for the market to respond, given where we are at these all-time highs on the S&P 500 and the questions that remain in the back half of the year?
I mean, John, I think on long weekends right now, we'll see what happens in the House overnight here. But let's say nothing happens. I think people are going to be very hesitant to go home with large, long positions. So it wouldn't surprise me at all if we saw a little bit of liquidation going into the weekend. But, this tariff story, July the 9th, there's going to be tariffs. Look at what happened or what's proposed or anyway with Vietnam. We have almost a permanent level of tariffs. We'll probably see more of these framework agreements. July the 9th, the president says he's not going to extend that. I mean, there's some July fireworks for you right there. And then, of course, on August the 12th with China. So I think there's several trigger issues out there, whether it's, is the big, beautiful bill going to get passed, which, it probably will. But these tariff things, they're in no way, shape, or form over, and we can easily see tensions go up there. And, speaking of tensions, I mean, the ceasefire is held between Israel and Iran. Oil prices are pretty tame, but, is that going to last or not? Because certainly oil prices, if they shoot up, that's going to be bad for the market.